Ooh, what's up, everybody? You are tuning into the Budgets and Brews morning coffee break where we discuss, chat, and ramble about this week's finance news. In this week's episode, we're discussing COVID-19 vaccines, the economic impact stimulus payments. We're talking about Bitcoin, the EV market, Turo Incorporated, the unemployment rates, Delta Airlines, and we're doing a 2020 market recap. So stay tuned. If you like this video, please smash that like button and don't forget to subscribe so you don't miss any of our new content. You could also visit us at budgetsandbrews.com to subscribe to our monthly newsletter. It has our financial articles, our podcast episodes, and all of our beer reviews summed up in one monthly email. So be sure to check that out. Without further ado, let's jump right into our morning coffee break. All right, let's jump into our first topic here, which is COVID-19 vaccines. So as of January 2nd, 13 million people have been vaccinated worldwide, according to the CDC data. So 13 million, Rich, what do you think out of like the general population? That doesn't seem very high.
13 million. So they said that they were going to try to shoot for 20 million by the end of 2020.
And that's in the United States, right?
Yeah.
That was like Project Warp Speed.
Yeah.
They were shooting for 20 million U.S. citizens vaccinated by December, the end of December. And currently, there's only just over 4.2 million have been administered in the United States. So severely lacking.
Yeah, underperforming. And they said it's logistics. They said it's the temperature that they have to keep some of the vaccines at. They say it's some unwillingness of people wanting to get vaccinated. I actually know people in the healthcare industry, and they were offered the vaccine and they turned it down. They said, no, I'd rather wait. So they didn't really take into account all the people who are going to sort of decline that in our essential worker force. And so it's interesting. And it's interesting not because they're just not taking it, but what does that mean then for the outlook of 2021?
Right.
When looking at this, what does this mean for schools? Are schools going to require students now who are attending college or high school or wherever that is to get that vaccine if it's presented to them in order to go ahead and study there? Or if they don't take it, are they going to have to go like online coursework? I don't know. It's interesting. What about like employees that are working places? Are companies going to private companies require that? That's something that if a private firm could do. You have to be vaccinated with this if it's presented to you, if you're going to work here. If not, are we going to see job losses? Or is that going to qualify as unemployment? Like you get unemployment for not doing that then? Are businesses going to reopen quick enough? It's interesting to me to see what our economy is going to look like next year and how quickly they can get this out. And now there's talk about, the different mutations of the virus, and it's in the United States right now. And they're saying, well, these vaccines will actually cover that, and they're going to go ahead and cure that. But it's very interesting to me. So we'll have to sort of wait and see what it sort of looks like going forward the next couple months.
Yeah, my fiance is a physician, and she did receive her vaccine, first and second dose. And I do know that they're tracking the side effects. So they send her, I think it's like daily or weekly updates to fill out a quick survey, how she's feeling, anything she's noticing, things like that. So I do know they're monitoring the different side effects for each vaccination. And we'll just have to see, I do think you have a good point. If people are vaccinated, will the economy start to turn around and come back to some sort of normalcy? Or if people are refusing it, or, can companies mandate that you have it? These are all unanswered questions that we'll have to hopefully see in the upcoming months. With that said, we do have some stock data here. I have Pfizer stock is down 10% the last month. Not entirely sure why, and it has almost no change this year. I know that is one of the more difficult vaccines to transport because this one requires to be stored like at really freezing temperatures. They have to ship it with dry ice, all that stuff. We also have Moderna on here, which is another vaccination company, and they have seen a 27% stock drop this past month. But they have had over a 448 increase this year. So Moderna's stock has shot up, and then there seems to be some sort of like downward trend right now, probably because they're not getting the vaccines out as quickly as they thought they would. And I'm sure there's some manufacturing delays and challenges there.
Skepticism comes into play, and that's why I think we're seeing sort of like a decline in some of those numbers. Before, when they they had the vaccine ready before it started in the distribution phase. The stocks.
Mhm. Yeah. Well, we'll see. Hopefully, it'll ramp back up. And the last one I hear is AstraZeneca, which I believe is the one that was developed in help with Oxford University. It dropped 5% this last month and also had almost no change this entire year. So, COVID-19 vaccines, we'll have to see what's in store. Hopefully, we'll provide everyone with another update in the upcoming weeks.
Yeah.
But let's move forward from that. We have the economic impact stimulus payments, which I know a lot of people desperately need. Still, unemployment rates are kind of higher than they were pre-pandemic, and the $600 stimulus checks are officially on their way. I think it's $600 for single individuals, and then if you have a partner and you make under a certain amount of money, you get like $1,200 or something like that. Some Americans,
for kid too, and
yeah,
your situation, but the average is going to be 600.
Yeah, and you can go to the government website, treasury.com, whatever it is, and you can look up the information there. But according to the Treasury or the IRS, some Americans may see the direct deposit payments as pending or as a provisional credit in their accounts before the official payment date, which is January 4th. So the official payment date will be tomorrow. A lot of banks will be processing these direct deposits for anyone who received the first check or has account information on file with the IRS. So some people may...
electronically.
Taxes, yep.
Did last time direct deposit. That's what you're going to be getting at direct deposit to that same account. So speaking from experience, I did, and I've received mine. So I have 600. It is pending in my account as of, I think I checked it yesterday. So yesterday I went and checked it. So it's in there. It's floating for me. And actually I'm being married. So it's actually, I think 1,200. 1,200
nice.
Is pending in my account. So happy to see that. There's a whole debate, obviously, with the 2,000 that we're getting. Is there more to come?
Yep.
And what does that look like? But at least for now, this is the information that we have. People should be seeing it, especially if you filed before, and that's the way you got it.
Yeah, and if you haven't filed electronically with your taxes or have your payment information on file with the IRS, you will not receive a just direct deposit, but you will receive either a mailed debit card or a check in the mail. And the IRS says it will likely take longer for the stimulus checks to arrive in the paper form or check and the debit card. So it could be a couple weeks, but everyone should have something sent out to them. I believe they're quoting by the end of January. So that's good. And
then the other thing too is I think we have this noted on here is what do you do with your check? So
that's
bucks, well, 1,200. If you're married. And there's a couple different things. I think I threw on there. I don't have it in front of me. I am vacationing out of town for the holidays. But what does it say on there, Tony?
You can catch up on bills is the first one. And I think that's a really important one, like, credit card, cable bills, phone bills, utilities, anything going to collections. You really want to prioritize high interest debt. So maybe some of that high interest credit card debt from Christmas, put that economic payment towards that. Obviously, a lot of people are struggling severely in the United States, so it's up to you to do what you want with your money. But paying off debt's never a bad idea. And the last thing you could do with your stimulus check is buy something you need, or maybe something you don't need. But don't use this money to buy something that will be a lot of put you in debt. Don't go in debt using your thing. Start
out of debt.
Yes. Start 2020 the right way.
Right.
Pay down some debt. Replenish your emergency fund, maybe a contribution to your retirement fund, and buy something you need or would help your family.
Yeah, and obviously there's also take care of yourself too. Before all of these, if your rent is due, you need a place to live. That's going to be that priority. If you need food to feed your family, that's going to be a priority. So there are those four walls that we watch out for: the transportation, food, shelter, clothing.
Yeah. So this next topic, let's move right along here. This is one I absolutely love, and I know, Rich, you're a huge skeptic. It is Bitcoin and cryptocurrencies. I believe in one of our previous episodes, you compared investing into Bitcoin into lighting your money on fire in your front yard.
Yeah, I stand by that.
I don't quite think it's that risky, but it certainly is not a sure investment. So Bitcoin soared to a new high above $33,000 on Saturday, which was just yesterday. It has tripled in value this past year. So definitely seeing exponential growth. Some analysts of varying pedigree project that Bitcoin will rise even higher in 2021. Some are saying, projections around $50,000. The ARK Investment Management CEO, Kathleen Woods, said a price of $500,000 for Bitcoin is sustainable. I don't know the full context of that. I'm not sure if she was referring to 2021, but that's quite the statement. And that was a quote that I got from one of our sources here. It's been very a volatile rise for Bitcoin the past month. Double-digit gains throughout the year. They've seen single-digit, double-digit losses as well. So it shoots up, it shoots down. It's doing really well this year, but it is certainly not an investment for the faint of heart.
Like I said, and I stand by it. If you have extra money, and this goes for any single stock, really.
Mm-hmm.
And so I'll use Bitcoin as an example, but it could be Apple, it could be Google, and people can argue, well, there's records on that. You can see the 10Ks, you could dive into there. True. But for me and my philosophy, I'm always right because it's my opinion. And so I think if you're ever going to invest into any single stock, I don't care what the track record is. I don't care what the company's objectives or goals, their finances, their debt. If you have that type of money, that's like going out in front of your lawn and setting your money on fire, because that is money that you have to burn, that you don't care if it does good or bad.
Yes.
You're set on your retirement end. You have your vehicles, whether it's your 401k, whether it's your IRAs, any different types, your health savings account, maybe you have a brokerage account, your emergency fund, your savings. You have all those taken care of for you. And maybe you have a pension going too, Social Security, it's coming in. And now you're like, let's just go gamble with a single stock. And I'm going to dump a bunch of money in there. So if you're already taken care of, cool. You don't really need that money, right? Like you have your cash flow, you have your income, you're paying for your stuff.
Right.
So that's why I compare it to that. And so same thing, if someone doesn't have any of those and they came to me and they say, Rich, should I invest in Bitcoin? I'm going to tell them, heck no. Are you out of debt? Why don't you pay your credit card?
Are you out of your mind? Really?
You have a % credit card, your interest rate, and you're not paying that. If you take that money and pay that off, you just gave yourself an 18% raise. I'll say 18% gains guaranteed over anything because you're paying that down. So you're going to get that money back if you're getting hit with those late fees, like, concurring over and over month to month. So that's why if someone says, hey, should I go invest in cryptocurrency or Bitcoin? No, but I'll give them the same advice if they come up to me and they say, should I put $500 in Apple? Well, do you have everything else taken care of first? Let's plan for your future, and then we can go and get risky. Just like going to the casino. You're going to go to the casino and gamble money away and taking a risk. Go ahead and do that as long as you're covered and you can spend that money. And it's not going to be.
It's got to be money that you're comfortable being gone forever and never getting back, right? Yeah. And I think you made a very fair and very smart point of is your debt paid down, right? Are your investment vehicles taken care of? Are you doing good on your 401k, your retirement contributions? Are you have all of your bills paid? Are you financially sound? And then, from there, maybe then you take some of your play money. I'm going to buy some individual stocks. I'm going to invest in Bitcoin. I think Bitcoin is far more risky than individual stocks for, say, like if you want to, you're investing in index funds, mutual funds, you have your 401k, your retirement accounts taken care of, and you want to have a brokerage account where you put some money into Amazon or a company that has seen a lot of good growth and things like that. It's still very, very risky because it's not an index and it's not as stable as a bond or a mutual fund. But, those are things that you can do. But Bitcoin and cryptocurrencies, they're not backed by anything. They're not federally regulated. Your money could potentially be gone at any time, and there's nothing you can do about it.
And it's in the news. People, Bitcoin by, you said passes $30,000. That's going to make news. People are going to see that, and they're going to say, I want some too. And so if Bitcoin tanks and it goes down to 6,000, maybe I'll buy then. If it goes down to 6,000, I might buy then. And also, I don't want to hear people complain about it, because if you were invested on that ride up with any news channel you go to, they're going to say it's very volatile. Like there's a lot of volatility behind it and everything like that. So it's like if it tanks, like you should have been aware of that. Like,
well, let's talk about this. Hold on, real quick. The volatility. I'm pretty sure it was October, or maybe a couple months before then. You could have bought Bitcoin for $6,000.
That's what I'm saying.
And it's at $30,000 right now. So you could see that the growth is just crazy, and those spikes. I mean, what was it, 2018 or something? I can't remember the year, but there
Yeah,
was a big Bitcoin spike and it went shot back down,
yeah.
and it happened. So be aware of that.
The yo
Um,
the yo-yo.
but we'll keep you updated on the Bitcoin
Yeah.
news. So let's move forward. We'll jump into our next topic, which is one I also think is really cool, and this is the EV market, the electrical vehicle market. So Tesla was in the news the other day. They were talking about how they were able to cut costs in their Chinese market, and then which was ramping up production for Chinese vehicles. This is good for Tesla because they're obviously reducing the cost that it takes to manufacture their electronic vehicles. But it's bad for the competitors, right? Because everyone's kind of fighting for these different EV markets. So, in a press conference, CEO Elon Musk said it's important to reduce the prices of their vehicles. He said, "quote I do not think there's a lack of desire for the product, but we do lack affordability." So the CEO Elon Musk is aware that this is a priority of his to bring down the cost of these EV vehicles. So the price cuts and even the competition have not really hurt electrical vehicle stocks. Shares of XPEG, NEO, Li Auto, and Tesla produced incredible returns in 2020. So NEO stock, for instance,
Yeah.
roughly rose
We had a lot of this
1100%.
too. We made a social post, and a lot of people were inquiring,
Yeah.
"What is that stock?" Yeah.
Yeah, so you can check us on Facebook. We do post every single day, multiple times a day, with all the financial news. So if you're not following us on Facebook, or if you're not signed up for our website, go to budgetsandbrews.com. You can subscribe to our newsletter there. Really good information. But Neil, like I said, 1100% increase in 1 year. That beat out Tesla, which was at 743% increase for this year. So the EV market's shooting up.
Yeah. Yeah. One of the things I thought about this, it was interesting. And we were having this conversation over dinner the other day because that's what we do if we're a financial household, that we talk about this stuff. But Tesla, they're trying to like reduce their prices in their cars, and they want to make them more affordable for the common consumer, to drive. And I'm all behind that. I enjoy it. I think electric's probably going to be the way to go. Um, but that being said, we were talking about if you got a free Tesla, if
Mhm.
someone just gave you a Tesla and said, here you go, but you really have to have a good financial situation, because we were looking up. Do you know what the average insurance rate to insure a Tesla is?
No, I don't.
$400 a month.
Wow.
$400 a month. This is something that we looked up the other day. I'm not 100% accurate. I forget the source. It was my father who looked this up. So blame him if he's completely off. But then I got to thinking, I'm like, well, give or take, let's say 500, 300, somewhere in that range. I guess that makes sense. And it's not because the car itself you have to worry about, but if somebody hits that car, to replace like a headlight or something, all those things are loaded with sensors.
Mm-hmm.
It's so expensive to probably replace any part on a Tesla if it
Yeah.
were to accident. And I think only could take it to a Tesla, a dealer, to have it repaired, like their auto shop.
Yes. Mm-hmm.
Anyone can do it. So when you start factoring in all of those things, like, it makes sense that it would be higher for insurance. So, but even if someone gave you a free one, to maintain that on top of like your car insurance is really, really high. So that's great that they're lowering the prices on these things, but still you might not be able to just put that into your budget.
Yeah, for sure. And I'll take it one step further. I'm pretty sure the automated driving features. I thought I read something about this not too long ago that it's going to be like a $10,000 subscription yearly to have the automated self-driving features with your Tesla.
Yeah,
I don't know if that's for all models or if it's like an advanced thing that they're dropping out, but I did hear about that. And then one other thing I wanted to add is that electric vehicles I do think they're going to continue to progress. I think they're going to become more and more affordable. They're going to be more and more common, and some of those expenses that you mentioned over time will become the standard of driving and standard of car repair. So hopefully that'll be baseline to an affordable level for the everyday driver. But as of right now, I think you're right. I think it's very expensive to own an electric vehicle. There's a lot of unknowns in the repairs.
Yeah.
That brings us to our next topic here, which is TURO Inc. Have you ever heard of TURO Inc?
Is that the car rental?
Yes, it is. I wasn't sure. I never heard of this company, but they are saying that they are going to go public in 2021, according to the CEO. And this is a car renting app. So they are essentially competing with like the car rental companies that you see like at the airport and stuff like that, like Hertz and whatever. And it's an app that allows you can either rent your car to people, on a daily basis, on a weekly basis, whatever, or you can use the app to, rent other people's cars. And they market saying it's much cheaper, but the renting process is kind of weird. I've heard mixed reviews. But they're making the peer-to-peer car renting company Marketplace reported its first ever profitable quarter this year. So they shared that with the Wall Street Journal, and they forecast achieving a full year of profitability in 2022. So they have the potential to. They have a good business model. Apparently, they're focusing on making money. The company has turned its first profitable quarter, so it looks like they're kind of heading in the right direction. And I think the IPO, I think them going public is a way to really get that funding to expand to a level that they want.
And I think a lot of companies, this goes back to trying to think where I start with this. So all the IPOs that pretty much came out, when you're looking at DoorDash, they came out, Airbnb. I think we talked about this, maybe we didn't. But it's like the IPO boom almost. Anyone that throws an IPO out there, it spikes and it does great. There's like 2019, 2020, like the difference between when they were released. And I'm not so sure if it's because people are just bored. They're at home. There's nothing they could do. So they're just gambling and they're putting their money in these IPOs. But I feel like there's a lot of companies that want to rush their IPOs because they want to get on a part of that sort of boom where people might not be educated in a company that's going to launch, but they're like, well, if they're just starting off with an IPO, let's just throw money on it because the only way it can go is up. That's like their mentality. I'm not sure. And it's novice investors. It's beginners who are in there using these Robinhood apps where it's a click of a button and boom, all of a sudden you own a company. And it's without that education behind it. So I'm wondering if Turo's doing something saying, hey, let's push this sooner than later because we know we're going to get a lot of people to throw money in it because everyone's just sitting at home. Is not back up and running. I don't know, but I also know Turo. It is. I've heard good reviews with it. If you're going to vacation, and it's almost like an Airbnb, you'll go on there and you'll find a car. Like you said, instead of going to like that airport to get a Hertz rental car or something like that. So I've heard good reviews on that, and I don't know so much if you are the person renting it, how good that is, what your profits look like,
what liabilities you have, and
because I feel like you're gonna have some additional piece of insurance that you have to put on your car if you're gonna be renting that out. And then do you have a sports car? If you do, I'd be very hesitant because then whoever's renting the sports car from you is probably gonna beat the heck
tear
out
it up.
So, interesting on that side, but I think it is beneficial if you're looking to go out to vacation or go somewhere to use that.
Yeah, very cool. So we'll have to see how their IPO goes whenever it does go public in 2021. We'll look forward to that. Moving right along here, we have some unemployment data points. So new applications for unemployment assistance fell last week, is a slight improvement during the holiday season. Weekly initial claims for jobless benefits for regular state programs declined 19,000. The unemployment rate is currently around 6.9%, which is still higher than pre-COVID numbers, but it's significantly better than like back in April, for instance, where the unemployment rate reached like 14.7%. That was like really high. This was after like the government shutdown. The numbers have they were spiking and now they're kind of like baselined out and we're kind of hovering around like the 6-7%. And we're hoping once these vaccines come out that it'll kind of get back to normal where it was prior to COVID, right? So I think as we wrap up 2020, we're kind of getting to the point where people are really, really pushing to try to get back to the levels and kind of the place where we were beforehand. Obviously, it will never, as you mentioned earlier, there's different strains of COVID now being found and stuff like that. So I don't think it's completely over yet. I think it's still going to be around in 2021, but I think we're getting closer to getting back to where we were.
Yeah, definitely it's going to be here. Definitely you're going to see business models having to just think about this 3 years down the road, 5 years down the road. How can we prevent something like this? Now, maybe this probably a pandemic won't occur for another 100. I don't know.
Hopefully a long time.
But that's currently in business owners' minds right now. Yeah. So they're trying to, if you're coming up with a business plan, that's going to be a factor. And how can we make things less hands-on, where we don't want to have like our germs sort of being contaminated around? Are we keeping plexiglass things? Are we going to more of a cashless society? I would not be surprised if you start seeing shares of Visa and MasterCard and all these roads go up, because I think cash is going to be obsolete as it has already
So
becoming,
touchy, you know?
and everything is going to be touchless. So if
Mm-hmm.
we could think about all of those devices or anything that we could use in our businesses that are going to become like just hands off, I think those things are going to rise, and businesses are going to be sort of like more, they're going to be putting more of those into their stores. And
Yeah.
just the way even architecture is set up and infrastructure inside these places are going to make it so it's like, more roomy and things like that going forward.
Yeah, I agree with you 100%. I'm kind of wondering like if businesses will start to have to purchase some extra like insurance for like, like something that might cover them if something like
Yep.
this happens again. You never know. But early last week Congress did pass a 900 billion COVID-19 relief bill and that added $300 a week supplement for those receiving unemployment benefits, and it extended two pandemic specific programs by about 13 million people. So the government did make some changes to extend the benefits, hopefully keep some people afloat that were still looking for work. As we mentioned, the unemployment rates are still kind of high, but they're looking better than they were. So hopefully it continues to improve. Moving forward, I got some information here on Delta Airlines. So Delta Airlines CEO expects positive cash flow by spring. I think this is pretty ambitious, but the CEO sent a company-wide memo stating that the company should expect a turning point this year in travel, as widely available vaccinations will spur a significant return to travel, particularly in business travel. So he's thinking once people get vaccinated, businesses will start resuming those normal business travel habits and ways of doing business. What do you think about that? Do you think it's gonna the airlines are gonna see a significant increase or?
Will there be an increase? Yes. Will they
Mhm.
go back to cash positive? I don't think so. I don't think they're going to be anywhere pre-pandemic levels. I think that the spring is way still. There's
So
already
early.
who are saying there's not a spring break. Like our
Hmm.
spring break is not happening. What we're going to do is we're going to take that week where a college would get a spring break. We're going to take those 5 days and we're going to divvy them throughout the spring semester. So you get a Friday off one week, you get a Thursday off another week, you get a Wednesday off. That way people still aren't
Yeah.
going location over a whole week, partying it up, and then coming right back to their,
And then getting everyone infected with COVID. Yeah.
and so I just don't think, I think that that's a very ambitious goal, and it's something that you want to tell your investors to sort of
Yeah.
keep ease. But I don't think air travel will ever return to where it was. I just don't. And
Yeah.
so, not to say it's not going to generate some revenue, and these companies are going to stay afloat, but we'll just stick with Delta for right now. My answer is no. I'll
Yeah.
probably play the option game and bet against whatever you're saying.
Well, I think, I agree with you that I think this is very ambitious and I don't think it's going to be, it's going to be a full recovery this year. But I do think, airline travel is not going away, right? People are always going to need to travel. You can't drive everywhere, even in the United States, going state to state. Sometimes you just can't make the drive. So I do think there's a need to have the airlines up and running. And I do think eventually, maybe somewhere farther down the road, they will kind of surpass where they were previously. But Delta stock this year has fallen 30%, and they went from $58 to around 40. So do you think it's a good time to buy airline stock, or do you think it's too early?
Yeah, I just wouldn't touch it.
Yeah.
But you know me though, I'm not a
Yeah.
single stock investor. I'm an index
Mhm.
fund investor, and so I probably wouldn't touch airline stock, just like I'm not touching any cruise line stock.
Some
You
people
know,
are very ambitious though, and they're investing very aggressively, trying to wait for these bounce backs and get the stock price while it's low. I mean,
Carnival,
Boeing. Geez,
Carnival Cruise tried to get something out there to say, hey, look, we just revamped
we're good.
our,
Yeah.
and they sent a cruise ship off, and then someone got COVID, and the whole cruise ship had a quarantine. So
Yeah.
it was premature, and boom, it backfired on them. So
Could you imagine being on one of those? Man, that would be just
I
the
just,
worst.
I don't think this is the year.
No.
I'll wait. I'm gonna wait.
All right, with that said, let's do our 2020 market recap. This data is from late December. We're still waiting for some of the reports to come out, but as of 2020, the Nasdaq yearly reported the Nasdaq is up 42.16%. So the Nasdaq saw a very significant increase this year. They're
Oh
doing
yeah.
very good, 42%. If you invest in any Nasdaq index funds, mutual funds, stuff like that, I mean, you're probably seeing really, really good
We
returns
had
this year.
record-breaking numbers from a
Yeah,
lot.
yeah, record-breaking numbers. Yep. So they're doing very well. The S&P 500 also doing very, very well, up 14.81% this year. Nothing to complain about there. The Dow Jones is at 5.75% increase. Nothing to write home about, as I say, but still not too bad. Gold had a record-breaking year, and gold kind of is like one of those speculative things too, kind of like a Bitcoin maybe, but it's been around a lot longer. But it is up 24.45% this year. So gold has seen a significant increase in value. If you're a gold investor, it might be a good time to sell. I don't know. I'm just saying. And oil has seen a 20%, but the petroleum industry, stuff like that, is down 20%, a little over 20%. So,
no one's driving anywhere.
Yeah, I don't think, honestly, there's always going to be I think all these renewable energies are coming around, and I don't think fossil fuel, oil, petroleum, and stuff like that. I think there's
a bunch of factors.
There will still be a lot of things that it may be needed for, but I think as far as like transportation goes, and with all these renewable energies coming out, oil is going to continue to hit hard. I don't think it's going to come back in the way it wants to. We got a fun fact here. So this was posted on our Facebook page. It's actually by Carbon Finance on Instagram, and we posted this the other week. So with a new round of stimulus checks coming around, the last ones were $1,200 per individual. So if you had invested back when the first stimulus checks came out, if you had invested your $1,200 stimulus check in NEO, it would be worth $17,000 today. That's a $1,300 increase, a 1,300% increase in NEO. NEO's the electronic EV company. That's crazy.
Yeah.
Like, can you imagine having a blowout?
Yeah, I mean, you would have never guessed that, and no one would have took $1,200 and threw it in one.
No. I mean,
it's just interesting. Yeah, it's fun.
Yeah, it is interesting. I mean, it was trading very low in the single digits, and now it's like at what I don't even know what it's at, but it's a 1,400% increase. So another big blowout one was Fiverr. So if you took your $1,200, you invested in Fiverr, it's up 565% this year, worth $7,985, just under $8,000.
Freelance work. That's what freelance company. So more people they're at home. They're doing designs for companies where they can stay at home. They're doing voiceovers for companies where they can stay at home. Bunch of online remote freelance stuff.
Here's another good one is Peloton. So Peloton's up 350% for the year. Would be worth $5,400 if you invested your $1,200 in Peloton back when you got your check. And that makes sense, right? Like a lot of the gyms were closing down.
Yep.
Peloton's known for having those TV screens and like your coaches and your trainers.
Yeah, the cycling stuff. Yeah. And another thing that talk about business models going forward is I think Peloton's going to be around for a while, because that's almost the new that quote unquote the new normal, where gyms are going to have to compete with that kind of stuff. Yeah. Now everything's going at home. Peloton's trying to actually work with a lot of gyms out there to sell them their bikes and actually use that stuff. So you could have a remote almost gym or cyclist trainer. I don't know what they call them.
A coach, something.
Classes without even have to coming into the gym.
Yeah, I do know they are expensive, but a lot of people are getting them, and I think the company is going to continue to do great. Another one we have here is Tesla. They came in just under Peloton at 341% increase. They are at, if you invested $1,200, your stimulus check, it would be worth $5,300 today. We all know Tesla's been doing great, expanding in the EV market. Another one we have here is Square. I think Square is a big one, especially we were talking about going, kind of moving towards like electronic payments and stuff like that. Square is I think they're a payment processing company. You ever see like one of those little white things plugged into like a tablet or something, credit card scanners and stuff like that. So they're up 272% this year. If you invested your $1,200, it'd be worth $4,469. And the last one is Bitcoin here, which is up 229, but I think this data might be a little bit dated, because I think I had here it was up a little bit higher. It probably is, because I mean this past month it's like shot, it's like doubled the value. So it's up 229% according to this post, and it's if you invested your $1,200 back then, it'd be worth $3,949. But it might be significantly more now. But that was a little fun fact for today, and that wraps up this morning coffee break. I hope you guys enjoyed. Rich, you got anything else to add?
That is it. Just as you mentioned in the beginning, but
Mm-hmm.
definitely follow us on our Facebook page, Budgets and Brews, for all of our latest updates. Just fun facts, just tips, finance, money tips throughout the day. We post about 3 times a day, and so you're always getting hits a little of these spurts of finance knowledge. So it's good to have on there. We do obviously our YouTube, where you're probably seeing this right now. So subscribe. We get a bunch of those types of videos, and now our beer reviews are also on YouTube too. So it was just podcast, but now you can actually see the beer and see us
Yeah.
taste it, everything, which is really cool. So I'm excited about that. And if you go to our Budgets and Brews webpage, you can subscribe to our newsletter. So let's say you miss all of our updates on our newsletter. We send it out. It's once a month, so we don't spam you. It's at the end of the month, and it's just a recap. Here are all the podcasts we did this month. Here are all the beer reviews that we did this month, our finance articles. So you have everything in one spot in your inbox, and you don't have to just stay up to date every single week we post stuff out. So I think having that newsletter, we're going to try to make that even just more popping, because right now it's sort of, and we're like, what do we do with this? But it's out there, it's live. And so at least you have the education, you have the materials and the resources. So give that a subscribe. That'd be awesome.
Yeah, we put a lot of work into that, and there's a lot of good information in there. If you're new to investing, or if you have any questions about your financial situation, anything you want to run by us, obviously we're not financial advisors, but we do a lot of research, and we have a good bit of knowledge here. So feel free to go to our website. You can visit our contact us page. You can reach out to us. Subscribing to our newsletter is a really good idea. And then also, feel free on Facebook. Just shoot us a comment. Send us a direct message. We're always checking that stuff. If you have any questions or concerns, we can address those in a future episode, if you'd like, or just work with you directly. And the last thing I will say is you can ask us we love giving away free swag, Budgets and Brews swag. We got t-shirts, we got hoodies, we got stuff like that. Feel free to ask for something. And if you do, we might just give you something. So you never know.
Day one.
Yeah.
Coming up. Yeah.
All right. Well, that does it for this week's coffee break. We'll see you.
Cheers.